we were studying that there are two accounts to check the balance of payment. Number one, the current account and capital account. Under capital account, we talked about the balance of trade or payment of merchandise and services. Number two, factor income payments. Number three, transfer payments. We talked about that. Majority belongs to the balance of trade, and there is a less contribution when it comes to factor income and transfer payments. So we have an example of current account benefit, current account transactions, and of course your book is US centric, so you can see a lot of US based example, so you can convert it or you can apply it to your local countries as well. So here we go. So let's discuss one by one. So the current account examples when it comes to the uh, balance of trade, it means you see here. Sorry, this is international trade transactions. So examples are JC Penney purchases stereo produced in Indonesia that it will sell in its US retail store. So if question is just silent, so assume yourself that you are in US because the book is US centric. Okay, if the question is silent, so assume yourself that you are in US. Otherwise, the question will mention that okay, you are in Indonesia or not. If the question is silent, now think about that whether this is outflow or inflow. Since JC Penn is US citizen, it purchases goods from Indonesia, it means money is going out from US to Indonesia. So that's why it is outflow. And outflow is also called debit. If you already passed out the accounting, so you know that expense increase, debit, right? If you don't understand them, please do ask. I would be, explaining that one. Number two, individuals in United States purchase CDs over the internet from a firm based in China. So when they purchase goods from China, they are paying their money to the China. It means money is going out. So don't think in terms of products, think in terms of money because this is flow of funds, not the flow of goods. Okay? Your country's balance of payments, it is measured in terms of flow of funds, right? If you're in US, you will be, you will be seeing in terms of dollars. If you're in China, you will be seeing in yuan. So balance of payment of a US country, you will see in dollars. Where dollars are going? If you are buying CDs from China, your dollars are going to the China. It means outflow. And now the Mexican government pays a US consulting firm for consulting services provided by firms. US, US receive the money, right? From Mexican government, they receive the money. It means US cash inflow. IBM headquarters in United States purchase computer chips from Singapore that it uses in assembling computers. Okay? You purchase from Singapore, it means money, the dollars are going to the Singapore. Cash, outflow, outflow debit, inflow, credit. Your sales increase, credit. If you want to double check your knowledge to the accounting. So I'm just gonna, so that is not necessary. Just gonna give you the, your accounting revision. That's it. A university bookstore in Ireland purchases textbook produced by a US publishing. So US is selling their books and receiving dollars, cash inflow, credit. Any question you want to ask? No? Then we will be moving forward. Okay. Now, the national income transactions, like factor income payments. So the component of current account, and its example. A US investor receives dividend payments from a French firm which he purchased stocks. So you know that money is coming inside the US from France. So that's why we call this inflow. Inflow is credited. US Treasury sends interest payments. So you already know that US is sending money to the German insurance company. It is payment. Payment is outflow. Outflow is debited. So this is not requirement, but just for your knowledge, for your revision of accounting stuff. Similarly, the transaction regarding to income factor payments, they are a Mexican company that borrowed dollars from the bank based in United States. So Mexican company is receiving dollars. It means dollars are coming out from US, but Mexican firm is sending interest. So the money is going out to the Mexican company. That amount of loan is outflow, but Mexican company is sending interest. Interest is coming to the US. That is the inflow, and inflow is credited. Understand, guys? Any question? Okay. Now the last one is international transfer payments or transfer transaction can be, for example, United States provide aid to Costa Rica in response to a flood in Costa Rica. United States provides, it means it spends money to buy goods or like tents or medicines or whatsoever. So it means they spend the money. Spend the money means cash outflow. Similarly, Switzerland provides a grant to US scientists to work on cancer research. So dollars are coming into the US, right? That is inflow and credited. So you understand, guys? Any questions regarding the current account transactions or any stuff you want me to repeat? Let me ask individually. Lota, Not, Kathleen, Crystal, Fabian, Ailey, Harry, Jenlep, Juan, Marilyn, Min, Nam, Ping Ping. Okay, no more question?
No. No question.
Okay, good. So we have an example here. That is the summary of current account in the year 2010. That is from the book of a US, of United States of America. So you see here, the total current account first is the balance of payment, net exports, including export of services as well. So you see net exports, US income receipts. Number 4 to 7 would be your net imports. You see that is a minus sign here. So total imports and export, you see here, that is balance of trade, right? So we have transfer by the United States. We have a negative number, 130. So you see the majority part is the balance of trade, exports minus imports, right? And it's a surplus sign, right? Or deficit. Here we go, the deficit, right? Now my question is, United States is a developed country. Now you tell me, it's a developed country. So this deficit is good or bad? Guys, The current account deficit balance is negative, which means it's deficit. And we're talking about the US. US is a developed country, not developing country, it's a developed country. So developed country, the deficit with respect to this specific situation is good or bad?
Bad.
Can you explain?
Because the companies are already expanded and they're developed countries. They do not have any more options in their local countries.
Now, be specific to this, their current account for 2010. Let me remove all the ink here. Now it is more good. So we have seen that the current account is in negative, which is deficit, and the country is US. So this is developed. Now tell me whether this is good or bad. Guys, I need your participation.
Is it bad because they imports more than exports?
Well done. So the US imports, you see that the majority part on their imports.
Wait, I just missed that. What is that?
Bad for US. Why? You see that exports are, the merchandise exports are 1045, service 509. So when you see that service exports are 509, imports are 305, so their service sector is doing good, right? But the merchandise or factory stuff, the companies, they are sending their goods to the other countries, exports are lower, but consumer are buying more stuff from outside world. So their merchandises, export and merchandises imports, net result is because of that one, right? Plus your country is doing bad, and United States is also transferring payments in grants and all those stuff to other countries, $130 billion, right? Maybe they are investing in wars or some, aiding the country, and that's all, right? But the majority of the problem, if you look at that, it's coming from the countries, companies or factories. Maybe the US have increases the taxes, so the prices of the goods of the locally manufactured products, they increases, so people find a lot of products cheaper from outside country, so they are buying their purchases from outside country, right? But question is, if we base our analysis just based on these transactions, it is bad. But if there is a note which says that since the country is going to establish Tesla company over there, and there are also companies is making countries making 2 or 3 dams, right?